This week's number, 45%. That's the percentage of NFT trades that were wash trades. What is a wash trade? It's a false signal. One wallet buys from another wallet it controls in order to send a false signal about the value of an NFT. Non-fungible tokens are entirely fraudulent tokens. Welcome to Prof G Markets. Today, we're discussing Microsoft's investment in OpenAI, wash trading, and we're checking in on European tech regulations from the DLD conference in Munich. How does it feel to be a DLD, Ed?
I'm feeling pretty great, Scott. I've eaten some Weisswurst, some Bratwurst. I'm on a diet of beer and sausages. It's pretty nice.
A few of my favorite things. Have you been to Munich before?
I have. I've been here for Oktoberfest a few years ago, but I don't remember it very well.
Yeah, that's they work hard, they play hard. It's it's a good thing. You just want to be sure that you don't just surrender to anybody here, because when you surrender to Germany, it's like having sex with a horse. Kind of identifies who you are for the rest of your life. Not sure I got that. Anyways, yeah. All right, on to the market.
Okay, let's start with our weekly review of market vitals. The S&P 500 climbed, the dollar dropped, Bitcoin enjoyed its longest winning streak since 2020, and the yield on 10-year treasuries fell. Shifting to the headlines. Inflation cooled for the sixth consecutive month in December, clearing the Fed's path to slow down interest rate hikes. Crypto exchange FTX says it's recouped $5 billion in cash and liquid investments after the company went bankrupt in November. It has roughly 9 million customer accounts to recover. Goldman is cutting 3,200 jobs, or about 7% of its workforce. Meanwhile, Coinbase is also laying off employees. CEO Brian Armstrong said he would reduce headcount by 950, and that's 20% of the company's total staff. Scott, do you have any thoughts on this news?
Well, it's a tale of two cities. The layoffs at Goldman, and I don't know if we did the analysis here, but the layoffs at Goldman probably just take them back a year or 2 years in terms of employment. I would imagine they've been hiring like crazy. Whereas the layoffs at Coinbase is just a preview of what's to come. I would imagine that they'll do another layoff, or I would predict they'll do another layoff in the next 6 months. The total value of the token market has gone from $3 trillion to around 600 or 700 billion. So just the market that Coinbase is known for creating an exchange in has gone sour. In addition, I think people are nervous about putting their assets on any platform that's not backed by FDIC insurance. So I think it only gets worse for Coinbase. I think you're looking at another 20, 40, 60%. I think Coinbase is going to be a shadow of itself this time last year. By the way, I invested in the IPO of Coinbase. I was trying to do a quick trade. I bought it. It came out at 360, I think, and I bought some. It ran to 410 for a hot minute. Then it ran back to 320, and because I didn't know the company, I just was trading just on the IPO. I lost a decent amount of money pretty quickly and got out. But it's good that I got out and decided not to just hang in there, because as we sit here today, it's trading at $43, so it's off about 90% from its highs. But anyways, one is a secular decline and will keep happening, and one is just a temporary blip.
Yeah, you were mentioning that idea of layoffs as a percentage of overall payrolls when we talked about this last week. And just a statistic here, as of November, layoffs account for less than 1% of all payroll, not all non-farm payrolls in the US. Yeah. And before COVID, that number was above 1%. Could you speak to that? And you had an interesting insight around how we're sort of obsessing over this tech stuff, but overall it's not really the same and for the rest of the nation.
Well, it is true. It's as you get older, what you realize is it's important to question almost everything. And when a handsome guy or an attractive woman in a sleeveless dress known as a news anchor tells you something, you sort of take it as having or assume it has a lot of veracity. And that's sort of your default positioning, recognizing that the media gets it wrong all the time. And this is an example of that. The media is profit motivated. So they will tell you anything that they think kind of keeps you engaged. And it's really interesting. We're obsessed with technology. We know Apple, we use their products. We know Meta, their products depress our teenage girls. So we know these companies really well. And when anything happens there, we take it as a proxy for what's happening in the larger economy. And it absolutely isn't. These are meaningful industries, but in terms of employment, they're actually, in terms of at least number of jobs, they're actually one of the smaller industries. They employ a small number of very well paid people and they create a ton of value. One of the reasons they create so much shareholder value is their revenues relative to the number of employees is extraordinary. So when we hear about a layoff at Meta, we get all hot and bothered. But the reality is it only takes it back to, say, November of last year, or it takes us back 6 months. And as you just pointed out, layoffs are at historic lows. And while the headline is about layoffs, which lends you to believe or leads you to believe that unemployment is a big issue, one of the biggest issues facing the US is not an absence of jobs, it's an absence of workers. There are 1.7 open jobs for every one person who is looking for a job. And what I hear from CEOs of small and big companies is the same thing. They can't find workers. There's even some really scary statistics about able-bodied men between the ages of 18 and 45. Supposedly there's 4 to 5 million of them who've just stopped looking for work. And it's not like they're discouraged workers. They've just made the conscious decision not to work. So this is the real economy. The issue with the real economy is where are we going to find skilled people to fill these jobs? It's not about an absence of jobs right now.
Mm-hmm. Yeah, the tech industry as a percentage of all US employment, it only accounts for 4% of workers, which is lower than construction, 5%, and manufacturing, 8%. Hospitality is 10%, and then education and health is 14%. So it does feel like we spend all of our time thinking about tech and obsessing over it. But in terms of actually the number of people working in it, it's actually pretty small.
And the ones you mentioned,
Yeah.
education, tech, and I'm sorry, you mentioned education, healthcare, and hospitality. I can
Hmm.
tell you firsthand, as someone who was on the board of my kid's school, we can't find teachers,
Hmm.
and they're leaving the profession. They're sick of this masking thing. They're sick of the shitty comp. So hopefully the market will take care of that, and schools will start have to begin paying them more. The hospitality industry is just massively understaffed. Any skills, if you're one of those kids that's handy, your dad or your mom taught you anything about carpentry, you're just basically handy. You can walk into a construction site right now in Florida and make, minimum 20, $25 an hour, maybe $30 an hour, which isn't huge money, but you don't even
Yeah.
need a high school degree. So employment is historically strong. It's actually a threat. And it goes to a meta issue if we're going to go really meta, and that is we're going to run out of young people that want to work. As societies become more educated, or specifically as women become more educated, they decide to not have more kids because they realize what a terrible deal it is when our Congress and our leadership is saying, okay, if you get pregnant, you have to carry this thing to term. Women start thinking, well, okay, maybe I don't want to have sex. And then also women decide, do I really want to have 2 or 3 kids? Maybe I'll just have 1 or 0, given that our laws don't protect women once they have kids. Loosely speaking, women have closed the wage gap with men under the age of 30 with the same credentials, but where they immediately fall behind again is once they have kids, they drop to 73
Yeah.
or 77 cents on the dollar. So we're not giving people a lot of good reasons to have kids. And old people, unfortunately, are living longer and longer and longer. So you're going to have this imbalance between the number of people and the number of jobs we need to fill, or people who are able bodied and can fill those jobs, and seniors who we need to support with kind of corrupt transfer payments so they can go on crystal cruises. Anyways,
Hmm.
bit of a riff there, Ed.
My takeaway is to get good at carpentry.
There you go.
Okay, let's move on to our first story. Microsoft is in talks to invest $10 billion in OpenAI. OpenAI is the artificial intelligence company behind ChatGPT. That's the AI assistant that took the world by storm in the past few months. The deal would value OpenAI at $29 billion, making it one of the most valuable startups in the world. And it's expected that Microsoft will try to integrate ChatGPT into its products. That includes the search engine Bing and also the whole Microsoft Office suite. So, Scott, let's start big picture. What do you generally make of this deal?
I thought this was really interesting. And Gary Becker or Gary Marcus, Jason was referencing
Yeah,
this
Gary
AI
Marcus.
expert. What's his name?
Gary Marcus.
So I think this is fascinating. Jason, our editor in chief, referenced Gary Marcus's view, and he said that OpenAI was initially meant to sort of check back or be a guardian for the dangers of AI. And where has it taken us? It's taken us to a deal with Microsoft and is advancing the commercial power of AI. So I'm not sure that's what they initially intended. The
Mhm.
structure is really unusual. It's a different type of organization or structure that to me seems like almost like greenwashing. Let's pretend we care about the world, but at the end of the day, we just want to get rich. At least that's how I initially read it. I guess 25% of the initial profits go back to the initial investors. Then it goes 75% to Microsoft and 25% to the I believe it's the employees of OpenAI, and then more of it goes back to the initial employees. I think the
Yeah,
profits and
I've got it actually in front of me, this deal structure. So I'm just gonna, because it is quite complicated, so I'm just gonna read it out here.
okay.
So first, Microsoft, so they're investing $10 billion, but Microsoft will receive 75% of OpenAI's profits until it recoups the 10 billion. And then after that point, and there's been a lot of confusion in the reporting here. Semaphore put out an article that it turned out to be slightly wrong. But after that point, once it's recouped the investment, Microsoft will start receiving 49% of the profits. And then the final strange thing is that Microsoft's return on investment is capped at $92 billion. In other words, it can only 9x its money. And that's, somewhat low in the world of venture. Um, and once Microsoft receives all of that, all of the equity and profits will finally revert back to OpenAI 100%. So, yeah, I was going to say these are very strange terms. It almost sounds like a loan or something similar. And have you ever seen anything like this before?
No, it feels a little bit like factoring when a retailer or a manufacturer's brand would say to a bank, I have these invoices. I've Macy's has agreed to buy $100 worth of my tops. So here's the order form. Give me $90. And when it comes in, I own it and you get the $100 when it comes in 3 or 6 months.
Mm-hmm.
It's strange on a few levels. One, I don't think this is an actual cash investment. I think it's in kind. And the thing that struck me about that is the amount of processing power that's required to power these AI applications. $90 billion dollars is a lot of money, and we're talking about profits. I don't think Amazon has registered that much in profits in its
Yeah.
entire lifetime. So you're talking about Microsoft tops out, if you will, or only gets enough profits if this company becomes one of the most profitable companies in history. So the other thing that really struck me about this deal is that distinctive of all the excitement around AI, this company immediately has recognized that they're nothing without a monopoly on the front end and the back end. And what do we mean by that? The processing power requirements are substantial here. Morgan Stanley reports that ChatGPT's average cost per query is 2 cents. That's 7 times Google's. If 10% of Google searches are replaced with AI by 2025, it would reduce operating margins by 150 basis points. That's a lot of processing power. Now, granted, that cost will come down, but essentially, there are only a handful of players that have the kind of cloud infrastructure to support that type of computing intensity. So again, we're back to the same old players. And also, I thought it was interesting that they've said rather than trying to figure out a front end to monetize this, we're going to do a deal with Bing that already has a front end, already has people using it, and already has a business model. And it immediately just sort of struck me, Sam Altman, I think, is a very bright guy, that he immediately realizes that their ability to get the infrastructure in place, in other words, they're going vertical. There are certain things about building out stores and factories that are an advantage, and that is 9 women can have a baby in a month. And that is, it takes a while to build stores. It takes a while to build infrastructure. And I found that thing that was just most interesting about this deal is they've decided to immediately forward and reverse integrate. And what it says to me is that artificial intelligence is like a refinery, but unless you're sitting on
Yeah.
billions of metric tons of oil being processing power, you're in danger.
My final question, Do you think who's the winner in this deal? I mean, I was seeing memes on Twitter comparing this to like a Kevin O'Leary shitty Shark Tank deal where he's like, I'm going to invest, then I'm going to take 75% royalties, and then after that, once you've repaid me, I'm going to take half of the equity. So, do you feel like there's a loser here, or is it even? Who's winning this?
So I think at the end, I think this is a great deal for Microsoft because even if AI and ChatGPT becomes somewhat commodified or commoditized, just the opportunity to establish some perceived or real, hopefully, differentiation with Bing and give Bing some renewed life
Yeah.
is probably worth a decent amount of money. And when you're talking about Microsoft, you're talking about a $2 trillion market cap company, a $10 billion investment. Sounds like a lot, but what is that? That is 0.5% or half. That's basically a dilution of 0.5%. In an effort to maybe be out front in what kind of might be the next thing.
Mm-hmm.
Microsoft is always sort of criticized for missing social, missing mobile, missing search. So if they're out ahead of what is the next big thing, or they're kind of putting in an insurance policy that they're going to be on the cutting edge, and they also get the opportunity to differentiate Bing, and this feels to me like right as rain, and they deserve it because my understanding is they made a substantial investment a while ago before anyone really was talking about
Yeah.
OpenAI. So kudos to them. It sounds to me like a really deft move, and you know, further evidence of why kind of Satya Nadella is the CEO of what is oftentimes the most valuable company in the world. It sort of pings back
Yeah.
between Microsoft, Apple, and occasionally Saudi Aramco.
Okay, let's move on to our second story. You mentioned wash trading at the beginning of the show. So, a recent report by June Analytics showed that in 2022, 58% of NFT trades that occurred on the Ethereum network were wash trades. This is where you buy an NFT, then sell it to yourself with a different account or to someone in cahoots with you for a higher price. And the idea is that you keep on selling yourself the NFT at higher and higher prices until eventually you can sell it to someone else for way more than you originally paid. In other words, it's market manipulation. So this tactic peaked in January, accounting for 80% of all NFT trading volume that month. And it's estimated that overall, 45% of NFT trades have been wash trades. That was the number we had at the top. Scott, I knew that wash trading was a thing in crypto, but those numbers are just staggering to me. Were you surprised by this?
Yeah, this number absolutely blew me away. And it just shows that unregulated markets don't work, or at least these ones don't.
Mhm.
And it made me, not that I was ever trading in NFTs, but I've gone from bullish on NFTs. I see that my kids are willing to pay for digital goods, whether it's skins or cool weapons or whatever, what have you, or costumes on Fortnite and other video games. So I thought NFTs make sense. Art has been a great store of value. Why wouldn't digital art be a great store of value? And you brought up the notion that this isn't that dissimilar from fine art dealers who buy stuff back and forth to try and raise the awareness and pricing around around a specific artist. But this feels
Mhm.
really over the top.
Yeah.
And where it leads me is that I've now become a bit of a bear and a skeptic on NFTs because the marketplace is basically this short-term window for grifters. And you can
Yeah.
just kind of imagine these farms of people who buy a bunch of NFTs for near zero or mine them or create them or however it is you manufacture or mine these things, and then just set about trying to create false signals everywhere in the market.
Mhm.
This to me again is another example of how while innovators complain that they need regulators to get out of the way so they can just run, all they've done here is create a market where some bad actors can come in and steal from other people, and the market's going to collapse under the weight
Yeah.
of the perception of fraud.
Yeah. Yeah. Something that strikes me about this is there are these two massive premises for crypto. And the first is transparency, and that's reflected in the fact that you have this public, immutable ledger that shows you a record of all the trades that have ever happened for an asset, and that's all publicly available. But then there's this second strange premise, which is anonymity. You don't have to disclose who you are to anyone, and all you have to show is your wallet address, which is basically the same as like an account number. And when you combine those two things, it's like this perfect cocktail for just fraud and manipulation because as we're seeing, you can create multiple wallets that look like multiple different people. You can move your assets around for extremely irrational prices. And it just makes the asset look more valuable than it is, and then you dump it on someone. And to me, all of this could be resolved if the system weren't anonymous, if you had to register your name and, I don't know, maybe your address or your birth date with some third-party auditor. But then it wouldn't be crypto anymore. So I guess my question is, what do you think of this idea of anonymity? Do you think it's important? And put simply, do you think it's good or bad?
Anonymity has been cloud cover for some of the most fraudulent, nefarious actions on the internet. And it's also resulted in absolutely no repercussions for people who have made our discourse more coarse. And it's used as this, what I'll call kind of the cultural intellectual elite, to talk about the importance of anonymity. And they use the edge case of a human rights activist in the Gulf who needs to be anonymous. There are ways you could figure out a way to allocate a certain number of accounts to people who generally need to be anonymous, and then distract the account and start seeing if they immediately talk about crypto or how Rocket's going to replace the dollar, or start attacking people, and you realize, okay, this person is a bad actor.
Yeah.
But in a wealthy economy, anonymity is just recipe and cloud cover for grift.
Mm-hmm.
And the fact that so many academics and, of course, the crypto Taliban have embraced anonymity, what you need is a strong legal system and smart regulators who create laws that protect people such that their identity, they don't need to worry about putting their identity on anything as long as they're not doing anything wrong. But, from the moment, my kids have social security numbers. You can't get on a plane without identity.
Yeah.
You can't get a driver's license. You can't get a movie ticket with a credit card. So this notion that this world was going to benefit from anonymity, no. The folks who have benefited from it are bringing it down. I think anonymity, I just don't get it. I get attacked every time I talk about the importance of identity.
I know, it's so annoying.
It strikes me as this kind of weird jihad-like religion that is circulated, and again, with anonymous accounts, reinforced by what I'll call the intellectual elite or the crypto Taliban, and those statements are circulated by anonymous accounts such that bad actors can continue to create this type of fraudulent signaling and make people angry at each other, tear us apart from the inside out with absolutely no ability to track them or repercussions. Identity is a wonderful thing. Mm-hmm. You can't have Airbnb without identity. You're not going to rent something from somebody you don't know. And no one's going to rent to you unless there's an identity attached to it. No one's going to get in the back of an Uber unless they know that individual has an identity and that Uber can find them if they take you to a dark alley and assault you. And at the same time, no one wants to pick up strangers unless they know there's an identity there. Identity is the reason crime has gone down is because of identity. And another thing we were talking about, and I'm sorry you invited me to riff here. Another thing the media gets wrong is, the politicians, the media will talk about the spiking in crime rates. Crime consistently over any kind of extended measurement or any sort of realistic, looking at screening out anomalies, crime continues to go down in every major city across the world, or almost, I would say, every democratic city. Why? Because of technology. And that is, if you commit a crime, they're going to find out who the fuck you are. Every ATM has a camera now. There's supposedly 97% of the sidewalks in London, if you're on them, a camera will capture your image. And I don't think it's all of a sudden people have become more equitable, noble people, that they're not assaulting others or stealing or murdering people. It's because they know they'll get caught. And that's a function of technology and identity. Now, at the same time, we have laws that make sure that people aren't, search and seizure laws, and that they have certain defenses to, innocent until proven guilty. But identity is a wonderful thing, and it's been positioned as some sort of menace or something. I just don't get it at all.
No, totally. Yeah, I mean, it's exactly as you say. It's these fringe case arguments that people make about, if you're oppressed, then, you shouldn't have to reveal anything about you. It's like, well, it sucks to have a face and a name, but for the majority of people, that's what being a person is. Anyway, let's move on to our third story. As we're here in Germany, we thought we'd catch up on some local news. Germany's antitrust regulator, or the Bundeskartellamt, issued a statement that Google users are not given enough choice over how their data is processed. The choices currently offered are, quote, not sufficiently transparent and too general. This is part of a larger crackdown on big tech in Europe. In 2018, the EU passed the GDPR Act, which set new standards for how tech companies handle user data. Since then, the EU has fined Meta $1.5 billion, Amazon $1 billion, and Google $250 million. Scott, in the past, you've praised Europe for how it's handled big tech. You've also described the EU Commissioner Margaret Vestager as one of your heroes. It seems like Europe is way more up for this antitrust challenge than the US. Do you still feel positive about Europe? And also, do you think that their actions have been effective?
So yes and no. I don't know if GDPR has been effective. It seems to me that it's been a real tax. It's done what it was supposed to do to big tech, to small and medium-sized media companies. I don't think GDPR, I'm not sure it's been a success. Having said
Mhm,
that, I think this latest legislation has real teeth. Interoperability, being able to take your data, not letting Apple be the gatekeeper for any in-app purchase on the iOS system, letting people choose their own tech with their own browsers or clients or apps, no matter what operating system. There's just a lot here to like. In addition, the thing that really struck me as part of this legislation, I don't know if it was the DSA or the MSA, said that essentially offline hate speech that's illegal is now illegal online, and the platforms are liable for it, which is effectively the ending of what we would call in the U.S. Section 230,
mhm,
and they can start taxing you or finding you real numbers. Because the bottom line is Facebook decided a while ago, 10 years ago, that their strategy was to break the law, recognizing the cash volcano they had, that if they had to pay some of that, even billions of dollars, as a tax for breaking the law, that it was worth it from a shareholder's perspective.
mhm,
And what they've done here is said, no, we'll tax you as a percentage of your total revenues. So some of these fines, you're probably going to see a multi-billion dollar or several multi-billion dollar fines sooner rather than later. And also, what motivates all of this is that in the US, we have a lot of upside or register a lot of upside from big tech. We have universities and hospital wings named after Google and Facebook billionaires. They create ecosystems, huge recruiters. 1 in 3 of my students goes to work at Amazon. We benefit a lot from big tech. Now, there's some downsides. The weaponization of our elections, teen depression, making our discourse more coarse. But in Europe, they get all of the calories, they get all of the negatives with
right.
none of the great taste. There are
Yeah.
very few universities or hospital wings named after Google or Facebook billionaires. So this is stiff in the backbone of EU regulators who are like, well, okay, this hasn't worked well for us. Why didn't we go Chinese and steal your IP and prop up local competitors and capture all the economic value ourselves, which is what China has done. And quite frankly, it was probably the smart thing for China to do. So I think the EU is sort of fed up with these organizations. I think they even have, I don't want to call it arrest warrants, but I'm not even sure Mark Zuckerberg can come to the UK right now. So, anyways, I think that they are leading the way, and the incentives make all the sense in the world. They have less to lose, and they're sick of this. And in addition, in Washington, we have a pay for play system where our elected representatives are presented with a really compelling deal. And that is the lobbyists from Amazon, Apple, Facebook, and Google say to them, here's a shit ton of money. And the key to getting reelected in America is money. And all you have to do is nothing. Just ask a lot of questions about proposed legislation and water down Senator Klobuchar's antitrust until it's almost meaningless, which is what has happened. So I'm bullish and hopeful about this regulation in the EU.
Mhm. Yeah, I think about how the GDPR has affected me as a user, and it was passed into law when I was living in London, so I experienced it. But yeah, all that really changed for me is that when I enter a new website, my browser asks if I'd accept or reject a cookie, and a cookie is the software that these companies use to track your data. And as a general principle, I'd always click reject, but overall, my internet experience hasn't really changed. And at this point, I'm like, do I really care that much that these companies are collecting my data? But I'm not sure what to think about it. So, what do you think about cookies and these tracking devices? Do you think that they're important? And do you think that American regulators should be paying attention to them as much as the EU is?
We need some sort of comprehensive privacy regulation.
Hmm.
And I'm one of those lazy people that says accept all cookies because I think I have a younger mentality in the sense that I don't mind having my privacy violated as long as there's a coupon or utility at the end of it.
Hmm.
And while people talk a big game around their concerns surrounding privacy, there's cognitive dissonance here, and that is they behave as if they could give a flying fuck about their privacy. Uber knows where you're going and knows where you are. Facebook knows your key relationships. And Google, if there was a hack on Google, you'd have social chaos because everybody was contemplating divorce or having affairs or had STDs or was HIV positive or managing diabetes or was thinking about joining the Taliban. Google knows all of this about you. It knows your sexual fetishes. It knows more about you than any priest, rabbi, mentor. It knows more about you than any priest, mentor, rabbi, scholar, or boss. So the amount of data we have just surrendered to these folks, hoping that we can trust them in exchange for utility. And for most of us, it's a good trade. It's scary to say this out loud, but I haven't had really any terrible things happen to me by giving up this data, and I get tremendous utility. You do. I mean, if you're really worried about privacy, you just wouldn't have a mobile phone. And very few people are willing to do that. So, but I do think we need some sort of privacy legislation. It's not that people don't mind giving up data for utility. What they mind is companies that don't put in place the requisite safeguards such that bad actors can access that data and then use it against them.
Yep.
And what they've shown is that not only do they not do that or make the requisite investments, that even if that happens, they try and cover it up.
Yeah.
So it's sort of, we can't trust them with this data is what it comes right down to. But I don't know if it's going to happen, but we're desperate for some sort of kind of systemic or, industry-wide privacy legislation.
Mm-hmm. Okay, thanks, Scott. Let's take a look at the week ahead. Fourth quarter earnings season is kicking off with Charles Schwab, Morgan Stanley, and Goldman Sachs, and Netflix is also reporting. We'll also see housing starts, existing home sales, and retail sales data for December. Scott, do you have any predictions?
So my prediction is I met the CEO of a software company in Germany, and it's the most successful company or tech company you've never heard of. It's a company called Celonis, and it's business performance software. They did $400 million last year. They're going to grow 50% this year. And I always ask the same two questions of any software company. And that is, what is their logo renewal, which is essentially customer churn, what percentage of their clients renewed in year two from year one, and then dollar renewal. What is the growth of revenue of those clients that they retain? And this company has about 90% retention and about $140 renewal, meaning of those 90 of 100 clients that renew, they're spending on average about 50 or 60% more. So this is a juggernaut. And at 400 million, if it goes to 600 million this year, and if it has 2024 numbers of say $1 billion, you're talking about a company that'll probably go public at a $20 to $50 billion market cap. It just closed on a round at 12 billion, which makes it, I think, the most valuable tech startup in Germany, and would be one of the probably 20 or 30 most valuable private companies in the world. But it is going to be, Germany is overdue. It's interesting. The UK just passed $1 trillion mark, and that is private tech companies are now worth $1 trillion, over $1 trillion in the UK. And in Germany, despite having a much bigger economy, it's only about half that. So Germany is sort of not an innovator. It hasn't been able to birth giants. I think SAP is their biggest tech company. But anyways, my prediction is that the biggest tech IPO in Europe over the next 4 to 6 quarters is going to be business performance software firm Celonis. That's all for this episode. Our producers are Claire Miller and Jason Stavers. Special thanks to Catherine Dillon, Ed Elson, Mia Silverio, and the Prof G Media team. If you like what you heard, please follow, download, and subscribe. Thank you for listening to Prof G Markets from the Vox Media Podcast Network. We will catch you next week.